for joining me on the Land and Everything Else podcast. I'm very excited to get to talk to you guys as kind of two experts in the field of farmland markets. So, Steve, I want to start with you. Can you give a little bit of background about you and about your company, People's Company?
Yeah, thanks for having us on the program, and it's fun to do this. Bruce and I talk a lot, so it's going to be fun to compare notes on the podcast. But yeah, my name's Steve Bruere. I'm the president of People's Company. We're in the farmland space, so everything we do is farmland. We work in around 30 states around the United States. It's anything from brokerage transactions. We'll handle about $1 billion worth of transactional work on the brokerage side annually. We've got a large appraisal team, so we do a lot of work for banks, trust departments, institutional investors that need to update their valuation. Then we manage farms in 24 states, so anything from wine grapes in the Pacific Northwest, almonds in California, corn and soybeans in the Midwest, and rice and cotton in the Delta. So a wide variety of crops. Then we've got a small crop insurance agency. The crop insurance business is core to how we underwrite assets, and so we use crop insurance routinely when we're looking at assets. And then we've got a capital markets group that deploys capital. So folks that want to invest in farmland, we help them with their diligence work, their acquisition work, and then the ongoing farm management work. And then lastly, one of the new parts of the business is our energy management business. And we've taken the old oil and gas management business and combined that with renewables. So there's a lot happening with wind, solar, and carbon. And so anything that touches a piece of farmland, that's what we do. And we've got offices in all the major ag regions in the country, up in the Pacific Northwest and California, Mississippi Delta, Lake States, and then throughout the Midwest. So we're very active.
Yeah, it sounds like you're in a little bit of everything when it comes to the farmland space.
There's a lot of diversity to it, and for a corn and soybean farmer from Iowa, the things that you get to see around the country, it's pretty fascinating.
Yeah, it absolutely is. It looks, growing up on a farm myself, agriculture in Illinois looks a lot different than it does in California, Florida, or Texas, places like that.
That's a fact.
Yeah. Well, Bruce, I want to move to you. I know you very well as you were my graduate advisor in grad school. But can you tell us a little bit about your background, particularly maybe your research interests, and kind of what you do, which is
what
a lot.
I do. It's a very eclectic appointment. I'm a professor at the University of Illinois, and I run something called the TIAS Center for Farmland Research. Our tagline is advancing farmland markets through research and information. And so we take it as our mission to do anything that also touches farmland transactions. So we want to know what the values are. We want to know what's influencing values, where the pressure points are, what's changing in demand, how world trade flows affect agriculture, and eventually down to the asset class. And so that's one area. And in my research, I've also spent a lot of time developing crop insurance products with RMA and also with private companies. Have also done an awful lot of work in just managing the capital positions of agricultural institutions that lend to farmers or have a position in farmland. So it's, again, a fairly eclectic collection of things, but what's in common is they all touch the land.
Yeah, no, absolutely. And, I think you're not giving yourself enough credit of all the different things that you're involved in. And you kind of both talked a little bit about crop insurance in particular, and we haven't covered that yet on the podcast. So what tool does, and maybe Bruce, I'll start with you. What tool maybe does crop insurance provide, maybe when it comes to a landowner? So I'm a private investor, I own land, I rent it to somebody else. What kind of guarantee does crop insurance give me as the landowner?
So crop insurance is truly one of the most unique federal policy tools that I think has ever been conceived of and implemented. One of the only asset classes in the world where you will have an insurance product that you can use to guarantee 85% of your expected revenue, for example, and it's subsidized in order to get enough participation. The thinking behind that, of course, is one, it's very hard to individually rate everybody. So a subsidy allows you to get close enough to get widespread participation. And with enough participation, the idea would be you wouldn't have ad hoc disaster claims if you had a functioning insurance market where the farmers had something at stake as well. And so it's been a massive success, but it's also incredibly complicated. There are around 200 different crops possible to insure. In most cases, you have somewhere between 3 and 7 different insurance products and somewhere between 5 and 6 or 7 different levels of insurance. So the simplest case might be corn and soybean farming in Illinois, which you're very familiar with, given your background. And you would have something on the order of 75 different possible combinations on your farm alone.
Absolutely.
So sorting through that and understanding how to use it for underwriting in the case of an acquisition or disposition, or from an investor's perspective, figuring out what their actual expected revenue would be, and being able to really cut off that downside risk, if you will. So in the stock market, you may have a plus 24% year like 2023 was, a minus 21% year like 2022 was, and a long-term average of something, 8 or 9%. Agriculture has the same sort of feature, but significantly cut off that downside tail.
Yeah. No, absolutely. It's very different than commercial real estate, where if
Indeed.
I'm renting my commercial office building to a company, they don't necessarily have insurance to protect themselves against those losses that could happen.
Right.
Absolutely. And Steve, you mentioned your work maybe in the renewable space. I know in alternative investments in the real estate space, we're seeing a lot more of demand by private investors for maybe those ESG initiatives. And so how does, what does farmland have to do with the renewable space?
Well, yeah, there's a lot of things, and when you really start to study what's happening with the Inflation Reduction Act, for instance, there's a lot of incentives in there built around a renewable future. And so, whether that's wind or that's solar or that's carbon, it all involves farmland. And so, you really can't get to a renewable future without farmland. And of course, there's a lot of headlines around carbon right now, and I think everybody's still trying to figure out what that's going to look like in the future. There's a lot of wind farms. We're going to talk about that tomorrow on the program, but there's a lot of wind farms, but there's going to be a lot more. And, when we represent landowners, they're constantly getting letters from renewable developers saying, hey, I want to put a wind project or a battery project or a solar project on your farm. And so it's really tough because it's a relatively new industry. And so there's folks like People's Company that are out there trying to advise on this, but it's new. And so, I think that it's still sorting itself out a bit.
Yeah, no, absolutely. And I think it's going to continue. We're going to just continue to see that space.
I
And I
think-
know it scares farmers a little bit, but it is probably going to be a part of the future.
I think so, and I think that the train's largely left the station. I mean, the bills are passed, the money's allocated, and so it's really going to be how does this play out over the future. So
Yeah, absolutely. And kind of maybe to that point, as we've seen kind of the rise in renewables the last 3 to 5 years, could each of you, and I'll start with Steve, could you talk about what you've seen impacting farmland markets the most within the last 3 to 5 year time frame, whether that's renewables, whether that is commodity prices, or what are you seeing in your business?
Yeah, I mean, commodity prices are generally what drives farmland markets, and we've had a nice commodity run here, but that was followed up coming out of the Corona relief packages where there was some payments to farmers as well. So there were some great payments that came in from some of the tariff issues and COVID issues that came into agriculture, but then we had a uniquely timed commodity price rally alongside that. And then low interest rates, of course. So you effectively had free capital, free money, and a strong commodity price environment. And that was just a really great recipe for strong farmland values. But we're now kind of heading into a different environment with higher interest rates and lower commodity prices. And so it's going to be interesting to see how it shakes out.
Yeah. And Bruce, maybe that you kind of segue into my question for Bruce. So kind of going off that point, we've seen, kind of a rise in farmland values over the last, few years post-COVID. What's your expectation for the future? Maybe looking to 2024, 2025?
Right. So short term is a little more complicated than long term. In the long term, I think the same fundamental forces that have always determined farmland will still play out. And one of the ones that is really still revealing itself is inflation. Farmland has historically been very positively correlated with inflation, which you would expect it to be. There's good fundamental reasons for that. And I think that will continue in the future. So when we finally figure out when the elements of this inflationary bout that we're reliant on money supply issues alone, and which ones we're reliant on supply chain interruptions alone, and which ones are part of a permanent shift in kind of the price level that we buy and sell commodities at, we'll know how much of that is in farmland. And then the long-term income prospects, likewise, I think have always been important. And current commodity prices are a signal of that. Because world markets are heavily integrated. But the long-term demand also depends on standard of living in growing parts of the world. And the world's going to get to 9 plus, and then eventually maybe 10 billion people. And they're going to eat food. And what determines what they eat will be standards of living. But as people increase their standard of living, they eat more protein. And so you have to grow more grain to feed more animals, to eat more protein for more people. So the long-term prospects are pretty easy to predict. The short term, you said 24, 25, those are much, much more complicated because farmland markets also exist in incredibly thinly traded situations. Maybe 1.5% of farmland turns over per year at arm's length. And so it's hard to disentangle neighborhood effects from fundamentals in certain small numbers of transactions. But I think what we're going to see, and what we've already seen, is that we've kind of tapered off. You mentioned the farmland appreciation, been nothing short of astounding. There are parts of the country up 60% in the last 2.5, 3 years. And so you would expect a bit of a pause, a bit of a reset while we try to figure out what those fundamental forces are as we move forward. So you probably heard the economists joke that if you give a number, don't give a date. If you give a date, don't give a number. And if you happen to be right, don't act surprised. I think the next couple of years are when we're going to really figure out, though, how much of the wake has pushed on the boat from this period of very heavy payments to agriculture, from market transition payments and COVID relief payments and high commodity prices and other things that were the perfect storm. If the storm were a positive thing, the positive effects all came together. After that, I think the same fundamental forces that have always taken place to influence farmland value will continue. They'll just be at newly determined levels.
Yeah. So, Bruce, you brought up a really interesting point about how really only 1% to 2% trades at an arm's length in any given year. So maybe, Steve, moving to you, we see, less than 5% of farmland, is institutionally owned. Do you see that changing in the next 5 to 10 years?
That's a big debate, and there's some great studies. Iowa State University is commissioned by the state legislature every 5 years to do a land tenure study, and landowners keep getting older. And, every time you see the report, they get a little bit older. And so there's a lot of folks that have built their thesis around this demographic shift in farmland and this expectation that there's going to be a tidal wave of land coming to the market. And, when you've got 1% to 2% turning over, there's a lot of interfamily, intergenerational type of transactions that happen that never hit the public markets. There's a lot of farmland that gets sold directly to the farm tenant that never hits the public market. And so I think over time there will be a lot of land that'll transition its current ownership for sure. And I think there will be more outside capital that comes into the space, but I don't think it's going to be transformative in the amount of land that's on the market.
Yeah, no, I would tend to agree with you there. And kind of wrapping up, we have ask everybody these last 2 questions. And Steve, since you with everything that Peoples is involved in, I want to ask this to you first. So if I am a financial advisor and I'm advising a client that is interested in the alternative investment space, and they listen to you and they're listening about farmland markets, let's say they have, less than $50,000 to invest, what products would you direct them towards?
Well, first of all, I think there's a void in the market, and I think that there's a lot of folks out there that are trying to solve that void. Mm-hmm. And I'm sure you've seen a lot of these products, whether it's Acre Trader on the crowdfunding side. There's a new one, Fractal, that's out. Mm-hmm. We have a product that we've pushed out before called Magma, and we've got a current product called DST Farmland, where you can 1031 exchange into a farmland vehicle. There's a couple publicly traded REITs, Farmland Partners and Gladstone. So there's ways to get into the farmland game. But, my observation is that if you want to own farmland, the best way to do it, the reason you want to own farmland is you want a real asset. You want to own it yourself. And so if you can find a way to buy that first piece of farmland yourself, that's the ideal way to do it. But sometimes some of those other platforms will help you at least get started and learn the space and learn where you want to invest.
Yeah, absolutely. And so going off that learning, comment you just made, Bruce, since you are my research expert, where would you send people to learn more about the farmland space?
That's a bit loaded, obviously, given how and where we're doing the interview, but it's a complicated asset to access, mm-hmm. right? But what we end up with is very strong information that says farmland returns have actually outpaced the S&P 500 almost any decade back to the 50s. Low correlation with other financials, high correlation with inflation, very low downside risk. So it looks really, really attractive. So your question is great. How do you get access to it? Well, it turns out that it's hard to because of that thin market effect. So you do have to start with sort of a professional advisor quite often. It's not one of
Mhm.
those things you can go look up, what's the ticker symbol for farmland is kind of the joke, right? But you need to start with that and a bit of research and
Mhm.
understanding what your tolerance for risk and your need for proximity. Do you need to be able to visit the
Mhm.
asset or not? But I think as we go forward, that idea that the owners and the operators become additionally separated, the activity of farming could be separate from the activity of owning farmland, could actually be beneficial to both. And so I expect that, as Steve said, it's a bit of an underdeveloped thesis. But again, the return characteristics are really positive for an investor to consider.
Yeah. No, absolutely. And it sounds like they have a really great resource and looking to your research to be able to learn more about it as well.
Absolutely. Yeah.
Awesome. Well, thank you, Steve. Thank you, Bruce, for joining us today. Appreciate
Thanks.
it.
Thank
Thanks
you.
for including us.
Hi, Eric. Thank you so much for joining us in the Land and Everything Else podcast. So, this podcast is a little bit about trying to inform people about the alternative investments space. So, could you start by giving us a little bit of background about who you are, what you do, and kind of how that fits maybe in the alternative investment asset class?
Okay, my name is Eric Geiger, and I am a farm management personnel of the company. So I manage the land for the absentee landowners, and we seek out tenants if needed. We do all the leases, we collect the rents. We're a property manager in the agricultural field to help people understand more of what we do. And we keep track of all the inputs, and we help guide our clients to making money and taking care of their land and helping them meet their goals and see where they need to be over the future years as they hold on to this asset that they've either acquired through purchase or maybe through an inheritance, or maybe they farmed it at one time and they just need our help and guidance to make it the most profitable investment they have.
Yeah, no, absolutely. That makes a lot of sense. And we see a lot of that. We're kind of experiencing that shift in generational wealth, and so we see lots of people are, inheriting farmland that don't necessarily have, a true stake to the farm. They're not farming it themselves. So, if you're giving a rough percentage, what percentage are maybe those family farms that you're seeing maybe transfer hands?
As far as nationwide or just what I see in
What you
my
see
own,
in your own?
okay. I majority of the farms I manage are come from an inheritance
Mhm.
situation, where the parents have passed away and the children there inherit it. And where we really come into play is you've got three kids, let's say, and they live in three different parts of the nation, and it's really hard for them to even get together for holidays, let alone handle the transactions and the activities of a farm. So that is
Yeah.
where majority of my clients are those absentee landowners that have inherited the farm and have been removed from the farm for pretty much most of their life. After they got out of high school, they went on to their own lives and went away from the farm. And so they really did kind of lost touch and base from where they came from. So
Yeah. So it's interesting in this kind of space and alternative investments that you kind of have that maybe clash of personalities where you have multiple parties that you are trying to, work with. And I'm sure you have had some issues maybe in the past of families not getting along, which might be a little bit unique in, this space.
yeah, it's like that in every family. You
Yeah.
have the families, everybody's gets along, everything does well, and then you have the ones that all three of them have a different personality, and we get into those situations quite a bit with trusts. They need that third person to be the go between and make sure everything's taken care of because it kind of makes Christmas dinner taste a little better when it happens that way. So.
I could definitely see that. So, a lot of our listeners on this podcast might be financial advisors or people that are maybe a little bit more familiar with the commercial real estate space. How does managing maybe a commercial property such as a strip mall or a commercial office building differ from managing a farm?
The overall fundamentals, I believe, are identical to the
Hmm.
same. Yeah, you've got this asset that generates its own revenue, and it has its needs. It needs its property taxes paid. It needs looked after. It has maintenance issues. Instead of a parking lot needing repaved, it has terraces that need rebuilt, or it
Hmm.
needs some upgrades, Or maybe you're going to convert this asset from maybe a dry land farm into an irrigated parcel, or maybe a conventional into an organic parcel. There's always new things coming along every year that change the aspects of agriculture. And just like everything else, it needs to keep up with that. And the technology that goes into agriculture today it's relevant just like it is in everything else.
Yeah.
So.
And we see, in commercial real estate, you see the regional differences of where, commercial real estate properties look different from a demand perspective from New York versus maybe Des Moines, Iowa. Do you see kind of those regional effects in, land ownership? Maybe talk a little bit more about the land that you manage when it comes to a diversity of crops. Are you managing, just one type of crop, or is it, several different types of, agricultural crops?
Yeah, as a company, we cover everything. We have orchards out in Washington and vineyards in Oregon, and we've got the corn and soybean rotational farms in the Midwest. And yeah, each one of those is uniquely different, and the amount of capital and income that those each generate is different, and their needs are different.
Mhm.
And you really, I think as a company, we do really good at making sure we have the right people in the right places. And if somebody isn't quite familiar with something, there's somebody there that they can lean on and bring that full circle to properly manage that asset. And it's different in every region, everywhere you go, from growing rice to grapes to corn.
Yeah.
So
So, and when we look at commercial real estate, when we think about maybe improving a commercial real estate property, that could be, new drywall or expanding a building or upgrading it in those types of space. When we look at, managing farmland, what kind of improvements or upgrades do you try to make to the land to maybe make it a little bit more profitable?
a lot of times you look at waste areas. Is there some areas that need cleaned up that could be productive? Um, there can also be a lot of Iowa farms, and there's even areas in Nebraska we didn't even think about needing tile. So where you go in about 4 foot deep, 4.5 foot deep, and you bury tile lines to drain off some excess moisture that's laying underneath that soil that's hampering the yield of it.
Mhm.
We're finding out that there's places where it doesn't rain very much in central Nebraska that there's underground water that's just flowing all the time, and we've had to put in drain tile.
Mhm.
And that's major improvement. You can take a yield from 150 bushel the acre to 220
Yeah.
bushel just by putting in drain tile. So finding maybe those places on that farm that weren't productive, is there something we can do to make those productive and generate revenue,
Yeah.
and also just improve the overall value of that farm? Even if you put in, let's say, a tile line, and you may only gain 20, 30 bushel the acre, but you may have just added $500 an acre
Mhm.
to the overall value of that farm now after doing that.
No,
So,
absolutely. So, like you kind of mentioned, there's lots of correlations between true commercial real estate
mhm.
and farm real estate as well. But before I let you go, we usually ask 2 questions to all of our speakers. So, starting with this first question. So, let's say I am a financial advisor or a financial planner, and I have a client that I'm trying to advise in the alternative investment space. So they currently maybe have, stock and bond portfolio. How do you suggest that they take advantage of maybe the returns that agriculture has with maybe a smaller dollar amount, like let's say $20,000, $30,000 versus, several $100,000?
One, there is some farm investment vehicles out there where you can put those vehicles into. They're only $20,000, $30,000 investments, and it's just to diversify your portfolio. Your financial advisor is telling you high risk, medium risk, low risk, and agriculture can fall somewhere in those, either any of those three platforms. It can fall into those, and so you can start out by looking for those. They're kind of like a REIT for agricultural land, and it'll help you get into that, owning a little bit of ag land for a little bit down, and then as your years progress, then maybe you can move into owning your own full-fledged farm all by yourself.
Yeah,
So.
I think that's the dream for a lot of
Yeah.
us in agriculture.
Yeah.
Now, final question. When it comes to our listeners, and if they are wanting to get more information about maybe the space, maybe about, agricultural land, where do you suggest they look to?
Well, of course, our company, People's Company, is the one you call to find out anything agricultural investment wise. We can guide people in any way they need any interest of agricultural land they're looking for. We can find a route for them to pursue and get them all the information they need to make a good decision.
Awesome. Well, thank you so much, Eric. I appreciate your time
Thank you.
today.